What's up, you guys? What a crazy day it has been in the stock market. We actually got halted for 15 minutes earlier. Oil is down 33%. Today is nuts. I'm not even trading. I'm literally just running errands and I'm out and about. But I did release a new swing trading course today on my Teachable account for the Capitalist Academy. I wanted to take a very important part from that course and give it to you guys for free. It goes through every single thing that I do when I'm going to put on a swing trade. Now, if you like this video, give it a thumbs up, share it with somebody who needs to see it. Now, if you guys want to be a part of the mentorship group, I will put the link below. It's only $30 a month. Have a good day, guys, and enjoy. Now we are moving into the final slide I have for you, and we're going to go over how to actually take on a trade. This is my step-by-step. If you want, you can take a screenshot of this. This is what you should be doing when you're going to look for a play. So the first thing is finding a trend or a pattern that we like, okay? I'm going to go over all this too. The second is defining your risk. So minimally, you want a 3-to-1 risk. So that means that if you're willing to lose, 3%, you need to be willing to, you need to make sure that whatever trade you're taking is going to offer at least a 10% move. The other thing is never risk 1% of your portfolio on a single trade, or never risk more. Some people do 2%. For me, that would be the highest. But I never risk personally more than 1% of my portfolio in a single trade. Say you have $10,000, right? That means that on a single trade, you cannot lose more than $100, okay? Now, that means that you can either go in with your whole portfolio and you can risk 1% stop loss till you stop out, or that means you can go in with $5,000, which is half your portfolio, and risk a 2% stop loss. Or you can go in with $2,500 and risk a 4% stop loss. So it really all depends. If you're more risky, I would say you can go with 2% portfolio max loss per trade. But for me, it's 1%. And this is for a simple reason, especially if you're a beginner. Your goal is to live to trade another day. Your goal right now is not to make money. Your goal is to learn. Your goal is to, making money is a byproduct of being a good trader. Your goal is to be a good trader. And in order to be a good trader, you have to be doing this for a bit. And you have to live to fight another day. It is days exactly like today, Monday, March 9th, where the market dies 7% and gets halted, that destroys people. It's days like today where thousands, if not hundreds of thousands of people are never going to trade or never invest again because they got bit so bad by the market. This is why defining your risk and having good risk management is what is going to make you a profitable trader. The next thing is actually, once we find and define our risk and we find the trend and pattern we like, we have to build a position. Now with swing trading, I split my buy-ins between 2 and 3 moves, right? So say I want to invest $10,000. I don't just throw $10,000 in to open the trade. I buy my first position of $3,000, and if it rips, great, that sucks. I didn't build a full position, but I made money, nice. I never average up. Let's say I buy in with $3,000 and it continues to fall, but it's still, in the pattern that I like. I add another 3, and then it says falls a little more, but it doesn't break pattern. I add 3 more. Then I set my stop loss. Okay. This will allow you to 1, limit your risk, but 2, get you the best average price that you can get. Because most of the time we don't just buy and then the market moves in your direction. You have to be ready and willing for the market to move against you. The next step, stopping out. Before you take any position, you have to know where your stop loss will be. If you go into a position and you're like, I'll figure that out later, you're going to get screwed. Never worry about making money when you're starting. Focus on just living to trade another day. Implementing and being disciplined with your stop losses is what is going to make you a professional trader. Losing, I'm here to tell you guys, I lost a lot of money in my day. Losing is part of the game, and the professionals know this, so you should know it too. the last part about putting on a winning trade is scaling out of a position. Another thing that the pros do is they know when to cover their risk and remove as much principal as they can off of the table. This is used a lot with SPY options or just options in general, right? Let's say that you have a position and you have 2 contracts, right? Actually, hang on a second. Let me see if I can go into the group Discord and see if I can find my profits and losses that I posted and see if I can get a good example for you guys. Where is profits and losses? Is this it? No, that's not it. That's not it. Okay, actually, this is a really good example. Hold on a second. Here we are. This is from the Discord app. This is not an option, but this is actually from Moderna, which is a swing trade that I shared with you guys. I swung this for a couple months. Let me zoom it in. So, sorry about that. You can see that my average cost was $14.22. I sold it when it was $29.29. I made a 100% return, which is amazing. Now, let's say that I still wanted to swing this position. The smart thing to do would be to sell out of my principal. So I would sell, everything I have. So let's do this actually live. So we have $3,600 worth of equity in this position. So let's do $3,661 minus my profit, which is $3,661 minus my profit of $1,883, which means I originally put up $1,778. So I would sell $1,778 worth, and I would just keep this position open, but with only $1,800. What this does is allows me to still be in the position. It allows me to limit my risk because at this point, the trade is 100% free because I took my initial money off the table. It's like if you're playing blackjack at a casino and you walk in with $100, right? And you win 10 $10 hands. Now you have $200. Why would you just continue to, trade with $200? No, take your $100, take your principal that you walked in with, put it in your pocket, and you can play the rest of the night with the $100 in profit that you have. And that is how you limit your risk, because even if you lose, the trade at that point is 100% free. And a lot of people do this with options where, say you buy 2 SPY options, okay? And I don't like to talk about options, but this is where it is a lot of the times. So you buy 2 SPY options. They're $100 a piece. Let's say the next day SPY rips, you had calls, they double. So now they were worth $100 a piece. You had $200 worth. Now they're worth $400, $200 a piece. You could either sell out of the position entirely because the risk versus reward doesn't make sense anymore and you can walk away with $200. You can either sell half of your position, which I would do, and let the rest ride. So now you turn 200 into 400. I would sell one position, get your $200 back, and then let that last SPY position just ride, because that's $200 profit you have out there that can continue to make you money. But even if the option expires worthless, you didn't lose anything. It was a free trade, right? So you can also sell out of your entire principal, like I said, and let those profits ride. And that is what I try to do. I try to de-risk my positions as quickly as I can. As quickly as I can, I will de-risk the position, because you don't want to be in a situation where, you had money and you had a profit, but then you ended up just giving it away. So let me move this out of the way and let's actually do all of these, and let's see if we can find a good position, and let's go do this together. So let's take a look at Chewy. Okay. We were talking about this earlier. Now let's pretend that this is not here because the pattern broke. This is what we see. This is number 1. Finding a trend or a pattern we like. I like playing symmetrical triangles. Okay. Next, we're going to define the risk. Minimum 3-to-1 risk. So let's say it's right here. None of this happened yet. We're just looking at this. I would buy in at $27.97. If it breaks out to the upside, it could go up to $37, which is a 34% potential profit. Or if it went up to 41, which is highs, that'd be a 49% profit. Great profits. Now let's say, I'll set a stop loss at a lower low. So this was the most recent low. I'll set a stop loss down here. Okay, so now I'm risking 10%. Let's say I'll give it a little more room to move. I'm risking 9% of my portfolio to make potentially 30 to 40, 50%. That is a great risk versus reward ratio. That is a 3-to-1, 4-to-1, potentially even 5-to-1 ratio. So now we have a trend. We have a pattern we like. We've defined our risk. Now, let's say I want to build this into a $10,000 position. I'm not going to just throw $10,000 here because at this point I'm risking, 8% of my portfolio. That is not smart. So what I'm going to do is I'm going to buy, let's say it's here, actually not at the bottom. I'm going to take my first position at $3,000. Now, if it rips, whatever. I mean, it sucks. Like you saw mRNA that I just showed you. That was such a small position because I was hoping that it would continue to go lower, but it didn't. It just ripped. And yes, I made 100% on $1,700. I wish it was $10,000. That's what I wanted it to be, but it's whatever. Things happen. So say it rips. Nice. You're already in a successful trade. It's not a lot of money, but whatever. Let's say it falls. The next day it's down 6% like it was here. Then I would average down and I would buy $3,000 worth more and move my average from $29.12 to about $28.31. Now let's say it breaks and it falls to here and it's at the lower low. It's at this point that I would add my third position of $3,000. Now my average is around $27.64 and I will set a hard stop loss down here like we said at $25.53. Now let's say that it bounces. Boom, right here. See how it bounced today? We didn't stop out. Now we're in for the full position. Let's say it rips back up to here. I'm up 20% on $10,000. That's $2,000. That's great. You can either do like we said and scale out. You can either just hold it all, which is the most risky thing you could do. But if it continues to rip, guess what? That's awesome. You're making a lot of money. You can either do that, or you could sell half of your position and lock in some profits. Or you could just sell out entirely. Those are your options. And that is how you scale out. That is how you do it. Because if you're going to just hold this position, especially if you're going to hold this position up here, you have to set a tight stop loss. Because there is nothing worse than being very green on a position. Then you allow it to sell off. You don't stop out. Then you went from making a lot of money to making no money because you're now even to now you're red. There's nothing worse than that. So I hope you guys enjoyed the course. If you have any questions on anything, shoot me an email, peterdecarlo@dfcinvestments.com. You can also shoot me a DM. You can comment down below on any one of these lectures and let me know if you need anything, guys. I have so many courses in the pipeline that you guys are asking me to do. I have ones on day trading that's going to be like this. I have ones on options trading that I'm going to be putting out as well. I'm going to have candlestick and chart patterns. I'm making an entire course on the Intelligent Investor book. God, already it's going to be like 6 hours long because it's like the best long-term investing book that there is out there. So let me know if you guys need anything. I'm always here for you.